My name is NURUL AMALIN BINTI Muhammad SUPIAN YEAP, and my metric number is 295132. So, today, we are going to talk about the 4 investing product which consists of real estate, unit trust, stock, and bond. I will be sharing with you guys about the real estate. Without further ado, let's get into the video. So, for the real estate, it is defined as might or might not have been yet improved upon by adding a structure or any other improvement. As for the characteristic of real estate, we have tangible, which is you can touch it, is a physical asset, but it is unlikely different from stock and bond. As for the second point, which is limited availability. So, land is finite, so it is making well-located properties more valuable. So we are going in for the advantages. The first advantage is cash flow. So cash flow, rent payments generate regular income. As for the appreciations, properties values tend to rise over time, increasing your wealth. Then the next one we have tax benefits. So tax benefits often come with tax deductions like mortgage, interest, and depreciations. Then we are going in for the disadvantages. So the first one is illiquidity. So for the illiquidity, it is difficult to quickly sell without a price discount. The next one, we have a management headache. So for the management headache, we need to dealing with the tenants, repairs, and upkeep can be demanding.
Unit trust is also known as a mutual fund. It functions by pooling funds from multiple investors with a similar investment goal to be invested in a portfolio of assets such as transferable security, cash, money market instrument, share in collective investment scheme, and derivative. Next, we move to characteristics of unit trust. First, diversification. Unit trust invests in variety of assets that can help to spread the risk and reduce the impact of any asset performing poorly. Second, liquidity. Unit trust is generally considered to be a liquid investment, means that unit trust can be usually buy and sell the unit quite easily. Third, accessibility. Unit trust can be invested with a relatively small amount of money. Next, we move to the advantages of unit trust. First, affordability. As unit trust, a collective investment scheme, the investor can start with the investment amount as low as 100. Second is professional fund management. Unit trust managers are approved by professionals in highly regulated industry. Lastly, we move to the disadvantage of unit trust. First is limited control. Investors do not have direct control over the underlying investment within unit trust. The last one is market risk. Unit trust also exposed to market fluctuation. The value of the unit trust can go down as well as up. There is chance that you can lose your money.
Hello everyone! Today, I'd like to talk about an important aspect of corporate finance. It is a preferred stock. Let's first discuss some key characteristics of preferred stock. First is priority in dividends. Preferred stockholders have a higher claim on dividend compared to common stock. If a company issues dividends, preferred stockholders must be paid their dividends before any dividends can be distributed to common stockholders. Second is fixed dividend rate. Unlike a common stock, which may pay dividends based on the company's performance, preferred stock typically pay a fixed dividend rate. This provides investors with a predictable income stream. Preferred stock also has its disadvantage: limited capital application. Unlike a common stock, preferred stock typically does not offer the same potential for capital application. This means investors may miss out on a potential gains if the company's stock price increases significantly. Let me share a little bit about common stock. Characteristic of common stock. Ownership. Common stock represents ownership in a company. Voting right. Shareholders typically have a voting right, allowing them to vote on important company decisions. Dividends. Common stockholders may receive dividends. To this are no guarantee and can vary. Advantage of common stock. First is capital application. It is potential for significant capital gain as a company grows, and dividend, it is opportunity to earn income through dividends. Disadvantage of common stock, volatility. Price can be highly volatile, leading to the potential loss, and it is no guaranteed dividends. Dividends are not guaranteed and can fluctuate.
Hello guys, my name is HAWA NAJIHA binti AZAHAR, and today I will be explaining to you guys about bond. So what is bond actually? Have you guys ever wondered about that? So without further ado, let's get started. Bond refers to a debt security issued by government or company to raise capital. So when investors buy bond, they are essentially loaning money to the issuer for a set period of time by which the issuer pay regular interest payment to the investor. So at maturity, the issuer repay the principal amount to the investor. So now, let's move to the characteristic of bond. So before investing in bond, you guys need to know a few characteristics of bond. So firstly is face value. Next is coupon rate, maturity date, credit rating, yield, issuer, coupon payment, and market price. Now, let's look at the advantage in investing in bond. So the first advantage is income generation. Bonds typically offer regular interest payment, providing investors with a reliable income stream. This can be especially attractive for those who are looking for a steady source of cash flow. So the second advantage is capital preservation. So bonds are generally considered less volatile than stock, making them a valuable asset for preserving capital. Stability can be crucial during market turndowns and market uncertainties. So the third advantage is diversification. So adding bond to a portfolio can help spread risk across different asset classes. Bonds have a low correlation with stock, meaning they can have potential losses in equity market, enhancing overall portfolio diversification. And the last advantage is liquidity. Bonds are traded in the secondary market, providing investors with a flexibility to buy or sell their holding. This liquidity can be beneficial for those who are needing to access their fund quickly to make adjustment to their investment strategy. So, by understanding the leveraging these advantages, investors can build more robust and resilient portfolio tailored to their financial goals and risk tolerance. Now, let's look at the disadvantage investing in bond. The first disadvantage is interest rate risk. Bond price and interest rate has an inverse relationship. When interest rate goes up, existing bond become less attractive and the price fall. This can result in a loss if you need to sell your bond before maturity. The second disadvantage is inflation risk. Bond offer a fixed interest rate. If inflation rises faster than interest rate you are earning on your bond, the purchasing power of your return get eroded. In other words, your money lost value over time. I guess that's all that you guys need to know about bonds. Thank you for watching this video.